Hi everyone, my name is Carl, founder and finance broker of Violeta Finance, and welcome to my latest Ask Carl video. This week's question comes from Corin. Corin, my apologies in advance if I have mispronounced your name incorrectly. Corin has asked, what does a first home buyer with 3 kids and predominantly single income need to save and or show being eligible to purchase a home? How can this be done whilst renting? Thank you for your question. It's a very good question, and I've seen and worked with clients that have been in that position many times. So to answer your question, yes, it can be done. How can it be done? Well, generally speaking, for your savings for deposit to purchase a house, the minimum requirement is 5%. Now, there are some lenders out there now that are offering deposits of up to 2%, but providing that you can service the loan. And that's pretty tough to do when you've only got such a small deposit and you're wanting to borrow a majority of the loan. So general rule of thumb, if you can work with 5% plus cover a little bit of the purchase costs, like the stamp duty, the lender's mortgage insurance, and all up, if you could have anywhere between 5% plus another, say 3%, 8% in total of the purchase price of the property, then what would need to happen is that single income predominantly would need to service the loan that you're looking to borrow. So with 3 dependents, that can be pretty challenging, just depending on the lender that you use. So therefore, I do have a range of questions with regards to your family income. If there is family tax benefit part A and B, we can use that to as income for servicing. So that will help the maximum borrowing potential that we can go for with that particular bank. Also, as a first home buyer, you are entitled to a stamp duty concession. So you get a discount on stamp duty, which is 50%, which is pretty awesome, which kind of helps the purchase cost down. The other one is if you are looking at buying new or building, you also get a first home owner's grant, which is $10,000 here in Victoria, which can also help with your maximum borrowing potential. So a couple of things that you want to consider is you want to be realistic about the home that you want to buy for your first home. So ideally, being modest, being realistic will definitely help your cause. And number 2, know that family tax benefit part A and B can be used as income for servicing with the lenders. And if you want to investigate this further, I'm happy for you to send me a message on Facebook or send me an email through the website, and I can work out your maximum borrowing potential for you. And what we can do is we can reverse engineer based on the family income, what kind of houses, property price wise that you should be looking at, and therefore try and devise a savings plan that would get you to purchasing that property in the short to medium term. So hopefully I've answered your question as well as I can, but if you'd like more information, please feel free to hit me up. For the others that have sent them their questions through, thank you for doing that, and we will try and get to them next week. Thanks for tuning in to my Ask Carl segment, and I look forward to seeing more questions for next week. So Carl saying goodbye and see you guys next week. Bye for now. Bye.